I'm really interested in knowing what your take is on where the market's going in Canada right now.
I think it's totally possible to be bullish in one way and bearish in another.
Where do we find equilibrium? That's the part where anyone who tries to predict it is they can't be 100% accurate.
We've got the demographics, as you say. So the boomers are retiring en masse, and there aren't enough millennials to replace them. These are industrious, hardworking people.
Yeah.
Those are immigrants. So like
And
I'm pro
that's
immigration.
what Canada and US were built on that.
So the worst markets are going to be in Southwestern Ontario, where actually household debt to GDP is like 200%. We're facing unaffordability levels that we haven't seen since the 80s.
Welcome back to REI Hot Seat. Andrew Hines here with Brandon Disher. Brandon and I go back a ways, although I don't think we've ever met face to face.
No, yeah, that's true.
But just quick summary of Brandon as I know him. A really smart guy, PhD, but an economics nerd. And I say that fondly. And guy I really respect his opinion, and I love the stuff he shares. So I always get inspiration from your posts, and I would love to hear you out here. So you've posted some interesting stuff lately, Brandon, and I was wondering if you had a topic today that you'd like to dig in, because I'm really interested in knowing what your take is on where the market's going in Canada right now, and even North America, if you want to kind of contrast the two, and how that affects real estate investors.
Okay, that's first of all, thank you for having me.
Yeah.
I love all your content, Andrew. It's awesome. I think you've done a real service for the community here, bringing these different people on your podcast and on your YouTube channels. I've learned a lot from you, so thank you for that.
No,
Um,
likewise.
yeah, so I have, you know, I think every investor needs to be a realist. That's how I'm going to start the conversation. I think it's totally possible to be bullish in one way and bearish in another. Okay. So for multifamily asset classes, I'm actually quite bullish. I don't know about capital appreciation into the future, just given where interest rates are and where they once were, say, in the late 80s compared to where they are today. But in terms of income and business viability, I think it's going to be a great business model for the next decade or two in Canada for sure. Mainly
Yeah.
because we have this supply demand dynamic.
Right. Yeah. So that's obviously like I talk a lot about the competing forces, right? You have the force of immigration, which is really just policy changes away from not being a factor. And then you've got the force of interest rates, which is obviously a downward force on asset prices. So where do we find equilibrium? That's the part where anyone who tries to predict it is they can't be 100% accurate. But maybe we can look at historical trends and make some predictions based on that.
Yeah, so you could just look at the yield on a 10-year bond.
Mhm.
You can throw 400 basis points on that, and that should be the cap rate, right? For a
Yeah.
multifamily asset class, right? Which actually, maybe that takes time to kind of flesh out, but that's actually hasn't happened in the current dynamic. We're not there, right? Like cap
So
rates
where
have
are you
not
getting
risen.
that from? You're just saying historically that's
Just
where we've been.
historically.
Yeah,
Yeah,
so
yeah, yeah,
so what's the 10-year bond at right now? What, 4%,
yeah,
5,
four.
somewhere in there? 4. Okay, so
So
4,
cap
so
should be
you're
like 8.
8. Yeah, caps should be 8, and they're not, right?
They're
But
not. No,
but
no.
the wild card here is like we've never really been in a place like there really a country that we can use as an example that had such extreme levels of population growth where it was way outpacing new housing
Right.
supply.
Correct. And on the offside of that, I mean, obviously we've had 8% rate rental inflation last year, which is going to improve your NOI, right?
Yeah.
So you could factor that in. So perhaps that's not correct. We'll see what happens long term. But nonetheless, as you say, like total fertility rate in Canada is maybe 1.5. It needs to be 2.1 just for us to sustain our current population.
Right, right, yeah.
So so that's why, and we're very lucky in Canada, okay, because we're welcoming to immigrants and we need them. Without them, our GDP, our economy, the whole system would fall in on itself. Right? We're just lucky that we're welcoming to foreigners. Because if you go to say like Asia, like China, South Korea, their total fertility rates are like one, maybe sub one.
Yeah.
Like they are destined for an ugly
Yeah.
situation. So let's just be grateful for that.
Well, and for
Put
those
that
who
in there.
don't get that connection, let's draw that out. Like the real factor is we have the aging population. We need working population
Yes.
to basically pay for the aging population. And with so many
Yeah.
boomers retiring, that's the problem. And I think, I mean, it's the chicken or the egg thing, but a lot of them are not having kids because they cannot see the affordability to have kids. So,
Like
but
millennials are not
yeah,
having kids. They are
Yeah.
not. No, agreed. Yeah. Oh, I
Yeah.
had 3 kids though, so I did my job.
Yeah,
You know,
I'm
I
working
know
on
you're
it. We
still
got
working on it.
one. We
Yeah.
got one.
Yeah. Well, you got some work to do, Andrew. Let's go.
Yeah.
Yeah, we need it. Society needs you, man. Come on.
Yeah.
Um, but yeah, so okay, so multifamily, we're just not going to be able to build the number of housing units that are required to restore affordability.
Not
The
even
CMHC
close.
says not even close. Like we need three
Like,
and a half million units in Canada. It's just not going to happen.
let's draw it out because you posted this the other day. So there was 200,000 new people in Ontario in the last quarter of 2023. In the
Right.
last quarter.
Right.
And and then the entire country produced, well, we had what was it, 214,000, 215,000 new housing units for the whole
Country.
country. We're talking in one
Yes.
province
Yeah.
in one quarter versus the
Yeah.
entire country. Now, granted, how many people make up the average family? Three, so obviously put that in context. But
Yeah.
it's so like it's like a circus. It's so nonsensical the way the numbers line up that it's like, where do we
Yeah.
land? Where do we land? And
Yeah.
and that's the reason I see to be bullish on Ontario and Canada in general. But
Yes.
obviously, there's the flip side of it where interest rates could stifle it, right? If we went back up to 1980s range, they could stifle it. I don't see that as happening anytime in the
Oh,
near future,
that
but
is not happening. We're not going back to double digit interest rates. That is not plausible. Aside from what the debt in the household sector, but debt
yeah,
federally,
yeah,
in the United States of America, their federal debt to GDP is 120%.
yeah,
Okay, that is an irretractable problem. You cannot raise interest rates that high. It's just not possible. And,
yeah.
anyway, so that's not going to happen. But
So the
um,
politicians kind of like concede, they know that their economic theory won't play out. They're not going to be able to get their target rates back to 1 to 3% inflation. They're just going to have to settle because if they were to do what was necessary, it would basically break their population.
I think inflation for the next decade or two is going to range between 3 and 6%, and interest rates will be right there with it.
Yeah.
That's what I expect. I mean, for me, we'll get back to housing in a second, but for me, just looking at the world at large, okay, we had a secular period from the 1980s right up till 2020, which was disinflationary, right? We had world peace. We didn't have the geopolitical issues that we have today. All those supply chains are going to come back to North America in some way or form, which is expensive. We have this green energy transition we got to pull off. Like Ray Dalio wrote a piece like maybe last month, and he said we've invested 2 trillion. We need to invest 10 trillion to pull
Yeah.
that off, right? We've got the demographics, as you say. So the boomers are retiring en masse, and there aren't enough millennials to replace them. So that's inflationary as far as wages go. There's many
Yeah.
things, many secular themes that are going to change inflation going into the future. I'm not talking like 20% inflation. That's not going to happen.
Yeah.
But it's not going to be sub 2% for the next 20 years.
Yeah. And even if we're being
How's that?
honest, when it was at the sub two, like our CPI includes substitution. So if somebody switches from steak to chicken, like they don't factor the full impact of the rise in price. So it's a misleading number to begin with.
Yeah.
And that actually serves, you can go down that rabbit hole of all the political reasons there are to sort of hide the true inflation number, because there are.
Yes. Yeah. Yeah.
And if
Yeah.
you look over time, you can see the effects of it. So
True.
the real thing I like to bring it back to is not to just throw out this stuff and like create doomsday scenarios, because I don't think that way at all. It's like,
Yep.
how am I going to navigate it? What are the implications for me as an investor? You pointed it out. I don't really expect capital appreciation, but you can still see your rents go up and up and up, because that, if they do keep immigration policy the same, if they can keep attracting people to the country, if they're crazy enough to want to come
Right.
and pay insane food prices and what have you,
Well, it's
they
still
need a
better than
place to
living in
live.
India. We're still a
Yeah,
way
like if
better
you're in a
place to
poor
live. Yeah.
caste, right? Like you don't want to live in
Yeah.
India,
Yeah.
right? And that's
No,
the
no, no, no.
people, the
Yeah.
hardest working people I see, are Indians coming to this country. Like they just
Totally.
they're so like enamored with the fact that they can actually make it, even though it's hard.
So
Like it is.
honestly, I think that is such an excellent point because anecdotally, there was a special on 60 Minutes last weekend. They were talking about the biggest ethnicity that's going to the States right now is Chinese people.
Yeah, I saw that.
You saw that, right? So
Yeah.
it's like, think about their problems. One, they can't leave the country legally and go move somewhere else.
Mhm.
Then they've got to go into Central and South America, fiddle their way up,
Yeah.
and get to the southern border of the United States. These are industrious, hardworking people.
Yeah.
those are immigrants. So like
And
I'm pro
that's
immigration.
what Canada and US were built on that. They were built on people that
Exactly.
weren't lazy.
Yes.
They were the ones willing to go across the ocean with
Yeah.
nothing for a chance to
Right.
make it, and they knew it would be entirely them. That's why we were so the opposite of socialist back then. I say we, long
Yes.
before our time.
Yeah.
You know, so the opposite of socialist back then because they were people who would make it for themselves. And then you've heard the quote, what is it? Hard times create strong men. Well, we're at the good times create weak men phase.
Weak
Like
man. Yes.
just people
Yep.
expecting handouts, entitled, oh,
Yes.
let's save the
Yep.
world because I don't have meaning. Whereas,
Yeah.
all you have to do is see some hard times and realize that the meaning comes from
Yeah.
hard work. Anyways, philosophical point,
But
but
yeah.
bringing it right back around to real estate, I think that what to your point about the 8% cap rates, the 400 basis points on top of the 10-year bond, I think we get back
Yeah.
there through rent increases. I that's my prediction, and I don't know what I'm talking about. I'm just throwing that out there.
It's totally possible. I mean, it just
Yeah,
takes a little time. It just takes a little time. So,
yeah,
so that's the multifamily side. So, we're not going to build enough. We've got lots of immigration. We're pro immigration. So that's going to
yeah,
bolster that business model. On the
yeah.
residential side, um, it's a housing bubble. That's just what it is. I'm going to call it as I see it. So I can tell you why I think that's the case. So, okay. So this is Canada inflation adjusted residential property values. Okay. So, if you look at the period from like 1970 right up to the early 2000s, we're kind of wiggling around, 40 or 60, right? It's an index. It's indexed to 100 at some point here. But once you get into this time for the last, 2019, you go up to 2020, we have that's a 30% bump in real residential value for real estate.
So this is real prices, inflation
That's
adjusted.
real. That's
Yeah, real
inflation
prices.
adjusted.
Yeah.
Okay.
I
So
mean, the
like,
fictitious, the skewed inflation number, but yeah, okay, I'm with
okay,
you.
well, sure,
Yeah,
sure, sure. Okay. So that's
but
my point
which just
is,
means it's even worse. But yes, I'm with you. Okay,
yes. Okay. So
yeah,
like housing is supposed to be an inflation hedge. So inflation's 2%. Historically, housing should go up 2%,
right.
in nominal terms,
And it
so
used
that,
to
and it used to.
In
Yeah.
London, that was normal. Like it was stagnant.
Yeah.
Yeah,
Totally.
yeah,
So that to me, you have like this whole appreciation that we've had in real terms. You should stretch that type of 30% gain over like 3 decades, not 3 years.
oh yeah.
Okay, so that's the first red flag. Um,
So aren't you already seeing a bubble pop though at that, we had the spike and then it obviously
well,
dropped significantly like a rock. Are you thinking like the head and shoulders like
well, yeah,
chart
that's
here?
that. Yeah,
Yeah.
yeah. So there it is, right? Like that is a technical trading pattern. Like you typically apply to the stock market. You got the first shoulder, you got the head, and then a second shoulder, and then it should come down,
Yeah.
potentially going below the first shoulder, right?
Mhm.
Um, so that's a very good point. That is another thing that could say that we have a bubble. But the next thing that I would point out is that this is the other huge red flag. Okay, so historically, when household debt to GDP, when that gets above 100%, and we did breach that in 2016, here we went all
Okay.
the way up to about 113%. Okay, that tells you the household sector is overlevered. Like they have debt up to the eyeballs. Okay, so that's a real problem. The third thing that matters a lot is, and I was going to show you a chart from WowWow, but it doesn't matter. The third thing is the type of debt. How is it structured, right? So in the United States in 2021, 2022, when interest rates were 2 or 3%, those folks were able to take 30-year term debt, which means their payment will not change for
Right.
30 years, right? Who cares what happens to interest rates? I don't care.
Yeah.
I got one payment. I'm paying the same thing for 30 years. And you know what? If we get inflation and my wages go up every year,
Yeah.
oh man, I'm going to rock that. That's going to be so cheap to me in 10, 20
Mhm.
years, right? Not in Canada. This is the sad part. And like,
Yeah.
I remember watching this in 2020 and just being like, what a travesty this is. This is like a perfect setup to pop the bubble. So
Yeah. It's a
In
built-in
20,
honeypot in Canada. It's a built-in honeypot. You go in and get into that low rate 5 year. It's the same thing. The credit crisis in the 2008 happened because they had people coming in on teaser rates, and then when
exactly.
when they renewed into the normal rate, then they were all
Yes.
screwed. Down here, if I tell an American that Canada has 5 year renewals, they think that's insane. Wait, you have 30-year mortgages but 5 year renewals? Like,
Yeah.
why would
Okay.
anyone want to do that?
I want to show this now because you've made that's such an
Yeah,
excellent point.
yeah,
This is it here. This is the chart. Okay. It shows you the green line here. This is variable rate debt. This is the amount of mortgages that were issued in 2021 and 2022. That corresponds with the highest real estate market, the biggest debt you could
yeah.
imagine at that time. This is new mortgage issuance, right?
Hmm.
Because people were walking into HSBC and getting a variable mortgage for 0.99%
Yeah, yeah,
on the proposition that interest rates would never go up, right?
yeah.
So more than
It's
50% of new debt issued in that time period was in the variable product.
Man,
Um,
it's culturally normalized. Like in they say like politics is downstream from culture, and they culturally normalize the 5 year mortgage, and everybody's just gone on with this. It's not normal.
yeah,
It's not cool. It's not okay. It's exposing yourself to a massive risk because all you need is some crazy irresponsible politicians like the last 5 years, and look what you get.
yeah. So in the defense of these people, right? Like I can't really see what you're seeing too much. If you had gone as an investor in say the 80s, right? And you started with a variable product and you just kept renewing at a variable product every single year, you enjoyed a huge tailwind, which was a
Hmm.
declining interest rate environment.
Yeah,
Okay. In 2021, for the first time in 40 years, Andrew, the trend
yeah,
changed. For the
yeah.
first time,
To go
interest
up, yeah,
rates on bonds actually went up. Okay, that is a
hmm,
huge move when you're talking about technical analysis. You just broke a 40-year trend.
oh yeah,
Okay, so here it is. Canada, we had rapid, real residential price appreciation in housing. We have this huge debt problem. Household debt to GDP, sorry, is over 100%. It's all levered on adjustable rate mortgages or short-term fixed mortgages.
yeah,
And now what's happened? We've seen interest rates go from, 1% up to 6 or 7.
oh yeah,
And the reason why we haven't suffered an even worse decline at this point is because those folks that took the fixed payment variable mortgages, they've been
yeah.
allowed to extend their amortization into a negative amortization position. It would be way
Yeah,
worse
yeah.
today
Yeah,
had they not done
adjustable
that.
rate versus variable rate. So yeah, they get to go into the negative amortization. Plus on the fixed rates, only a quarter of them have renewed, right? Or maybe we're
Yeah,
beyond a quarter now. But each year a quarter of those 2% rates are going to renew
quarter.
into
Yes,
to five, six.
correct. Yeah.
Yeah.
So by 2026, 2027, 100% of the mortgage market
Mhm.
is going to be pushed into a higher payment mode. Even if they
Yeah.
cut interest rates, like even if they do what the market projects, let's say, we're supposed to get 4 to 6 rate cuts, we're still going to see payments go up 30 to 40% for sure.
Yeah.
Right.
Which is
So
it's still monstrous in the high tax environment in Canada. I mean, because the coming from the mortgage industry, like the qualifications, you can go up to 44% of your total gross income for total debt service.
correct.
So if
Correct.
you're in a
Yeah.
high income tax bracket, that leaves no money for food, no money to buy gas, pay a car payment.
Yeah.
Well, a car payment would be factored into TDS, but buy a car, pay for
Yeah.
transit, bus
Yeah.
pass.
And
It's a silly system, and I always thought this back then. I'm like, wait, you can have 44% of your income, but your tax in the highest bracket's like 56. That means there's zero left over.
yeah.
uh,
So it's an ugly setup. And
yeah,
you know, again, I try to be a realist. That's my goal.
yeah,
And just looking at these things, I can't. And these housing bubbles, when they pop, it's a protracted time period. It takes 6 years on average.
right. So it could
Um,
already be popping for
yeah,
housing, and we're just watching the Head and Shoulders model play out. Potentially, it could
yeah.
be.
I could see a spring market here actually, and I could see prices increase again.
Hmm.
The spring market. I
It's
wouldn't
already
be
happened
surprised.
in Toronto. Yeah,
Yeah,
like
yeah,
there. It depends on where you are. Like Canada can't be looked at as a whole for that. Like, I mean, I think in the macro trend you will see it, but in
yeah.
the in a short time period, anything could happen.
So the worst markets are going to be in Southwestern Ontario, where actually household debt to GDP is like 200%.
Oh yeah.
Right? Yeah, well, that's where all the debt is.
Yeah.
It's in Toronto GTA area in the
Yeah.
suburbs. It's in London, Ontario. It's in Kitchener. It's in Whitby. It's in
Hmm.
King. It's in Durham. All those types of markets. It's also out west in BC. In those
Yeah.
areas surrounding Vancouver. Calgary, the middle of the country, Saskatchewan, Manitoba, Alberta. Those places didn't get the rampant type of appreciation. They don't have
No,
the
they didn't.
affordability problems
They're
that we
doing
do.
a
So I
lot
think
better.
yeah, they're doing a lot
Yeah.
better, and they probably will do a lot better going forward too.
Okay.
Like we have to deliver here in Ontario, and I think we have to do
Yeah.
that in BC as well.
So
So
Brandon, to put a bow on this one,
yeah,
housing, like you said, you suspect more multifamily will stay stagnant. I would think so too. I think rents will go up. I think values will stay the exact same, and appraisers are just going to start looking at it and they're going to start saying, okay, well, the new norm is a 7. The new norm is a 7.5. Now it's an 8, and the
yeah.
values stay exactly the same. I think that that's probably what's most realistic. But with houses, how does the immigration not offset that? Are you predicting immigration will decrease?
Oh no,
No.
I mean, oh Andrew,
Like, are we gonna have
okay.
another million people this year? Like,
No. Well, they
no.
can't because politically that's intolerable, right? Like there's
Yeah,
going to be there's a political backlash to what's
yeah,
happening, right? Because you got Generation Z, you got millennials. God help us. Like we're facing unaffordability levels that we haven't seen since the 80s, right?
hmm
So, um, they want to buy houses, they want to have families, right?
yeah,
And if it's painted as the immigrants are the problem, we get some backlash against that. That would be terrible, like for Canada, because our
yeah.
GDP it's linked to immigration. Like
Right.
our GDP won't like I'm talking total GDP, not per
Yeah,
capita or anything
yeah,
like that. Like if we don't have immigration, we get a very, very severe recession. Like that's what would
yeah.
happen.
Then we'll be straight into the stagflation.
Yeah.
Yeah, but our GDP per capita is basically a prosperity indicator, and that's been declining in Canada. It was always in parity with the US, or it was trending together, and then now it's
Yeah.
like US GDP per capita,
Yeah.
which means the amount of wealth that each person is creating
Yes.
is higher in
Yes.
the US. And it's the spirit of Americans, and that's why I'm more bullish on the
Dude,
US.
it hasn't
Yeah,
changed in Canada since 2017.
yeah,
It's
just
right. Like so
stagnant.
GDP per capita has gone up in the States where Canada's like
Yeah,
so you're right. The pie, the GDP is growing, the overall pie is growing. It's just how much of the pie you're gonna get per person is less.
yeah,
Which is
yeah.
I mean, that's abysmal. That's not sustainable,
Okay.
obviously. So we need some political changes to be more productive.
Okay, so from a housing standpoint, you think even though immigration is going to continue, you still think that just because of the affordability issue, the non-investor, they're going to see those prices come
Well,
down.
I don't. Well, okay. Well, let's test the scenario. So, why have we fallen 17% real terms nationally? Um, it's because of demand destruction, right? Like demand
Yeah,
supply dynamic is still stretched, but because
yeah,
people have to go through the income testing and they got to get past that stress test, which is your
yeah,
rate plus 2 or 5.25,
yeah.
no one can get a mortgage. And as
Hmm.
long as people are still buying properties with mortgages,
Right.
which I think the majority of first-time home buyers have to do, because who's
Yeah,
got over 600 grand
yeah,
just kicking around, that's going to be a problem. That's going to be a problem. So if the Bank of Canada decides to cut interest rates, let's say
yeah,
lower, and you get mortgages with a four handle, well,
yeah,
that tips us back to the point where 100K couple in the country could get a mortgage for say 455, 550, maybe 550. Now
yeah.
they can afford the average home again,
Right.
right?
Yeah,
But if
and
they
I
do that, what
think
happens to inflation?
so. So
That's
they
my
need to
question.
come back in line with each other. Yeah, because I know you shared that too. Yeah,
Mhm.
like we're off. The average. I think we're looking at the average home is like 630 or something. If you run the
Yep.
average income, you're looking at more like 400, 425, somewhere in there for
Yep.
qualification right
So
now.
that's a big down payment, right?
There's a
Like,
huge gap there.
so
Yeah, you
that's
need
what's
to get
killed the
money
market
from mom and dad, and
from
people will
mom and
find
dad.
solutions. But I think the
Yeah.
immigrants,
Yeah.
like, and I used to see this all the time. You'd have Chinese people come into the country, they're slapping down full cash buying stuff. The amount of
Yeah.
money coming into the country with foreign investment or people who are getting residency here, although there's restrictions on that too, so it's going to
Yeah,
affect things.
it's a foreign
So
buyer brand right now.
yeah. So there's so many factors at play. It's just so hard to figure out where we land. But
Yeah,
I
yeah.
love the discussion. Hopefully that gave people some ideas as to how this is going to affect their strategy. What are they going to do? I mean, certainly if I'm buying houses, I'm going after a big under market discount. Like I want to get a ton of insulation in there. Like that's just where I'm at.
Yeah, yeah.
But
I'm with
Brandon,
you, man. Yeah.
tell people where they reach you.
Well, if they want to find me, I used to hide, quite frankly. But
Yeah,
if you want to follow me, your probably best bet is on Instagram,
yeah.
and it's just Brandon, BRANDON.D.54. Yep.
Nice. And we're going to have you on the podcast. So people stay tuned. Brennan will be back on the podcast. This is our hot seat, obviously, but podcast in like April. So we'll be releasing an episode, long format, going into your story, your student rental investor, doing
Sure,
lots of
sure.
cool stuff there. I could
Yeah.
talk to you for hours, man. So yeah, really
Okay.
appreciate this. Thanks for doing it,
Okay.
Brennan. And we'll have you back again if you're interested.
Okay, great. It was my pleasure. Thank you.
Okay. Talk soon.
Bye bye.